Welcome back to Guerra and Guerra, Bridging the Gap. I'm Julius Edward Guerra, and joined with me, as usual, is my co-host son, who still asks me for gas money, even though he tells me he knows about cryptocurrency and decentralized finance.
Hey, this show ain't filling the bank itself, Dad. But you're right. And we're here to do exactly what our title says today, bridging that gap. And today we're talking about a big one that we've received a lot of questions about. What exactly is cryptocurrency? Or as my Uncle Ed calls it, internet funny money.
Well, he's not exactly wrong, but we're going to dive a little deeper today and take a look at, what you can understand without hearing about Bitcoin, what's going on with Ethereum, these other cryptocurrencies. They can be very futuristic concepts to many people. So like anything, explaining dial-up internet to someone born before 2000 is our goal today. So we're going to demystify that for you here. In our first segment, let's talk about the basics. What is it really? All right, so let's start with the simplest definition. Think of cryptocurrency as digital money. Now, unlike a dollar in your wallet or a bank account, which are issued and controlled by a central authority like a government or the bank, kind of like controlling a TV remote in the house. Cryptocurrency is decentralized. Anybody can use it.
And that's the key word there, decentralized. It means that there's no single company, bank, or government entity that's controlling it. Imagine trying to get a bunch of teenagers to agree on what to watch on a Netflix. It's that essentially that level of centralized control we're not talking about. Instead, it's maintained through a vast network of computers across the globe.
Yeah, exactly. And so this network uses incredibly complex cryptography, and that's where the word crypto comes in cryptocurrency. A secure transaction and verified and created with new units. It's all recorded on something called a blockchain. So think of this like digital scroll as it unrolls or is created that keeps track of everything. But instead of one person writing on it, it's thousands of super smart librarians, or in this case, computers, entering it simultaneously. All right, moving on to section 2, blockchain, the backbone of crypto.
The blockchain is really the foundational technology here. Imagine it like a digital ledger, like a bank or accounting book. But instead of being kept by one person, it's distributed and constantly being updated across thousands of computers all at once. It's like everyone in the world copying the same really long spreadsheet. And they all have to agree on every new entry before it's added.
Exactly. So every time a cryptocurrency transaction happens, it's grouped into what they call a block. And once verified, that block is added to a chain of previous blocks, creating this, as we call it, blockchain, making this incredibly secure and transparent. So everybody gets to see it. So once a transaction is on the blockchain, it's virtually impossible to alter or remove it. It's more permanent than a tattoo you got on spring break.
So, it's inevitable, it's unchangeable, it's a public record of every single transaction ever made for that particular cryptocurrency. This transparency and security are the biggest reasons why people are very excited about it, and why you can't just accidentally send me Bitcoin and then claim it was a typo.
It wasn't me, it was the one-armed man. So, understanding this stuff is definitely getting complex, and they haven't figured it all out yet. And let's talk about segment 3 here. Why was it created, and what problem does it actually solve? To truly understand crypto, it helps to understand why it was created. Bitcoin, the first and most well-known cryptocurrency, was invented in 2008 in the wake of a global financial crisis. People were feeling very, to say the least, shaky about traditional banks.
Its creator or creators, only known as Satoshi Nakamoto, aimed to create a new electronic cash system that was completely independent of all traditional financial institutions and governments. They essentially said that we can build a better mousetrap, one that doesn't rely on cheese being guarded by only a few fat cats.
We do love our cheese. But yes, it offers a way to transfer value directly between two parties without the need for intermediaries like a bank, potential reducing fees and transaction costs and speed, especially across, borders. Imagine sending money to your cousin in Australia without having to fill out a dozen forms, go to a Walmart, go to a MoneyGram, or do any of that, and do it right from your phone with ease and less mess. All right, so on segment 4 here, key characteristics of cryptocurrency. So let's summarize some of these features here. Just trying to impress your friends at the next barbecue. You can talk about this. Decentralization, or decentralized, no single point of control. It's democratized finance, if you will. Secure. One of the better things about this, advanced cryptography and blockchain technology are almost impossible to break unless we start talking about quantum computers. Transparent. All the transactions are public record. It's kind of like going into a bank vault where all the deposit boxes are glass. You can see everything. Now, you don't have access to it, but you can see it. So it is transparent. Irreversible. Once a transaction is confirmed, it can't be undone. It's what they call immutable. You can't hit the Control-Z button. It just doesn't work. And then global. This is everywhere. Okay, it's not just the United States. It's not just anywhere. You can send a gift to your aunt over in Antarctica.
So it's pretty important to note that while some cryptocurrencies do aim to be a form of digital cash, others, like the Ethereum blockchain, are platforms for building a decentralized application, which is the whole other layer of innovation. It's like the difference between a simple digital dollar and having an entire different digital ecosystem, an entire economy of its own, where you can build anything from games to virtual worlds that use these currencies like we use money now.
And I really think this is what inspired the CEO of Facebook to change his company to Meta, because he sees what's going on with this particular technology.
Okay.
All right, segment 5, common misconceptions and important considerations. Now, let's address some of the common misconceptions, because the internet is full of experts, as you know, and their opinions on cryptocurrency are definitely what you want to know about, including any of those conspiracy theories about aliens building the pyramids. But that's just for the criminals. While early on, again, criminal activity is, what they were using this particular type of transactions for. Cryptocurrency transactions are legitimate. Also, due to transparency of the blockchain, many illicit transactions are usually easier to trace than cash. So it's like trying to hide stolen elephant in a glass house. It doesn't work very well. And it's fake money. All right. So is it digital? Yes, but it has value because people are willing to exchange goods and services for it. So its scarcity, often programmed into its code, in this particular case referring to blockchain, just because you can't hold it doesn't mean it's fake. And you can't hold Wi-Fi either, but that's probably, how you're listening to this particular cast right now.
And some important considerations for anyone thinking about doing this is, firstly, the volatility. Cryptocurrencies are known for their price swings. Values can go up and down dramatically in short periods, much like stocks on the New York Stock Exchange. It's not for the faint of heart, and for those who panic when their Netflix show buffers, this probably ain't good for you. So next up are the regulations. The regulatory landscape is still evolving. It's very new, and we know how fast the government moves on legislation. So it's probably not going to be completely regulated, much like our current banking system is, for at least, I would say, another half a decade at most.
And let me just share, Trump is pushing as hard as he can to get this to happen. So literally today, there was more news on him pushing through a gigafactory getting built in Texas for energy, for the purpose of cryptocurrencies.
All right, so he might be speed tracking the legislation on this, it seems. So could be a lot sooner than many were expecting. And next, finally, the securities of your holdings. As unlike a bank, if you lose your crypto's wallet's private key, which typically is a 12 to maybe even 17 combination of words to make a key phrase, if you lose those, your funds are gone forever. No two-factor authentication, no backup method. If you that phrase is your backup method. So always store it, because if it's gone, everything inside that wallet is gone as well, forever. Basically, losing this is like losing the keys to a safe after you've buried it halfway in the Sahara Desert. You ain't gonna find it, and even if you do, you're not gonna be able to get into it. So this is a personal responsibility for the security of these keys is paramount.
All right. In our final segment, how do people use cryptocurrency today? Beyond just trying to get rich quick, investments and speculation is really what the main topic is. So many people buy crypto and hold it as a store of value. It's a bit like betting on your favorite sports team, with more zeros involved. But, regardless, payments, it is used for payments. A growing number of merchants, both online and offline, accept cryptocurrency, everything from pizza to luxury cars. And I'm very familiar with that. I was with a group that literally a couple of years ago used Ethereum to buy a Corvette down in Miami and made a big deal about it because they bought a car using Ethereum Cash, $86,000 or something like that. But yeah, definitely. So remittance, sending money internationally, often lower cost, international, quick transaction fees, nothing quicker than sending crypto. It really isn't. Decentralized finance, using crypto to access financial services like lending and borrowing are becoming much more popular. So in finance today, they're trying to tokenize everything, whether that's real estate and things of that nature. And then the final that our Uncle Ed was asking, are NFTs still something? And I guess they actually are, which are unique digital assets. It's kind of like an electronic receipt. Cryptocurrency and their underlining transactions. So you won't go too deep into NFTs, as far as, investing in those, but they are probably something that businesses and institutions may start using because, like I said, it's like a digital receipt. So a lot of uses for that. That's all I have for today. How about you?
So to wrap it up, basically, for what my final thoughts are, is that basically the recap, cryptocurrency is a digital, decentralized money that is secured by a cryptography on a blockchain. It's offering basically an alternative to the traditional financial systems that our banks use and is gaining traction across various sectors, not just because it's not a passing fad. This is not some trend that's going to die out. This is a financial evolution, and it's one that still has a lot of growing pains.
Definitely. It is fascinating and rapidly evolving space. So we hope this episode's helped you to understand a little bit about what there is and realize doing your own research and understanding the risk involved is definitely something you want to look into. But if institutions like BlackRock, some of the largest banks and investment companies on the planet, are investing in them, and many other, Michael Saylor, the CEO of MicroStrategy, is one of the largest institutional holders, and they're going to start to use this as a bank. So that's Bitcoin in itself. The blockchain and the cryptocurrency are definitely separate, but they're unique things together. So just understanding how these evolve, and don't just blindly follow your guy on TikTok who promises you'll be a millionaire every Tuesday.
So if you have any more questions about crypto or any other financial topics, please feel free to leave a comment down below. We'll definitely reply, and we might even feature it on an upcoming video.
And don't forget to check out our website, realstepsnft.com. Needed financial tools, not non-fungible tokens. For more resources on financial literacy.
Thanks for tuning in to Guerra and Guerra Bridging the Gap.
We'll catch you next time. Try not to lose your private keys.